All right, so are you ready to dive into some of these wealth-building myths that we've all heard a million times?
Oh, I'm ready. Let's do it.
It's like, these myths make you wonder if you're doing everything wrong when it comes to finances.
Yeah, for sure.
So today, our source material is Debunking Wealth-Building Myths, Data-Driven Financial Truths.
Interesting.
And trust me, it's got some real gems in there, so get ready to have some of your assumptions challenged because we're separating fact from fiction today.
I think people are going to be surprised by how much of what we think we know is just plain wrong.
Oh, I was surprised reading through this material. Like, for example, did you know that 80% of millionaires in the U.S. are self-made?
Wow.
That kind of blew my mind, like shattered a few assumptions I had about needing a trust fund to make it big.
Yeah, it's a good reminder that wealth isn't necessarily inherited.
Right.
It's built.
Exactly.
Through smart decisions and habits.
Okay, so let's jump into myth number 1. You need a high income to get rich. And this one just feels so, ingrained in our culture,
Absolutely. But the reality is it's much more about your savings rate and how you manage your money than the size of your paycheck.
So it's not about how much you earn, it's about what you do with it.
Exactly.
Yeah, yeah.
That makes sense. The median income, for example, for self-made millionaires is $250,000, not millions.
Oh, really? Wow.
According to the source material. And it's so fascinating because it really highlights the power of compounding.
Okay, compounding, break that down for me.
Yeah, so basically it's the snowball effect of earning returns on your returns.
I see.
So think of it like this. You invest $100 and earn a 10% return.
Right.
You now have $110. But the next year, you're earning 10% on $110, not just that original $100.
So it just keeps building on itself.
Exactly.
Okay, so even if you're not, raking in a six-figure salary, consistent investing can make a huge difference.
It absolutely can. And, the source material even cites the Millionaire Next Door, which...
Oh, yeah, I've heard of that.
It highlights how many millionaires live surprisingly frugally. They're not necessarily flashing cash, they're strategically investing it.
Right. But isn't there, a certain level of income you need to even start investing?
That's a common misconception.
Which leads us to myth number 2.
Okay.
You need a lot of money to start investing.
Right, and that keeps so many people from even, getting started,
Yeah.
But the data shows that consistent small investments over time are often more effective than waiting to invest a lump sum.
So even if I'm not rolling in dough, starting small can still get me on the right track.
Yeah.
Okay.
And this is where dollar cost averaging comes in.
Okay.
It's a strategy where you invest a fixed amount of money
Right.
at regular intervals, regardless of market fluctuations.
Okay, so dollar cost averaging, can you give me a real life example of what that would look like?
Yeah, so imagine you want to invest $100 a month, right? With dollar cost averaging, you're buying a certain number of shares with that $100 each month, regardless of whether the share price is high or low.
I see.
This way, you're averaging out your cost over time and minimizing the risk of buying high and selling low.
So wait a minute, if the market dips, I'm actually buying more shares at a lower price.
Exactly, yeah. You're taking advantage of the dips
to
potentially increase your returns in the long run.
This makes investing feel so much more accessible.
Absolutely.
I wish I had known about this sooner.
Yeah.
Speaking of things I wish I understood better.
Okay.
Let's move on to myth number 3. All debt is bad. I mean, this just sounds so logical, right?
Yeah.
Debt equals stress, financial strain.
Sure.
The whole 9 yards.
It's definitely ingrained in us, but debt can actually be a powerful tool.
Hold on.
For building wealth.
Wait, are you saying there's good debt?
There absolutely is. The source makes a clear distinction between good debt and bad debt. Good debt is used to invest in assets that are likely to appreciate in value over time.
Okay.
Like education or real estate.
So like taking out a student loan.
Right.
To get a degree.
Yeah.
That leads to a high-paying job. Or getting a mortgage to buy a house. That's potentially good debt.
Precisely. And, the source actually cites Forbes data showing that 70% of the Forbes 400 billionaires utilize debt to build their wealth. They leverage loans and mortgages to grow their businesses or acquire income-generating assets.
Okay, but how do I know if the debt I'm taking on is the good kind?
The key is asking yourself, is this debt helping me acquire an asset that will likely increase in value over time?
Got it.
Or is it simply funding consumption?
Okay.
That provides short-term gratification.
So financing a vacation on a credit card?
Probably not going to build wealth.
Probably not.
but getting a mortgage,
Yeah.
to buy property that could appreciate might.
Got it.
So it's all about making sure that your debt is working for you,
Okay.
not against you. Think of it like this. Are you the master of your debt, or is your debt mastering you?
That's a powerful way to think about it.
Yeah,
So we've officially debunked the myth that all debt is bad.
we have.
But what about investing in something as volatile as the stock market? That brings us to myth number 4. The stock market is gambling.
Right.
This one kind of makes my stomach churn a little, to be honest.
It's understandable why people feel that way.
Yeah.
The market can feel unpredictable.
Yeah.
But the source highlights that it's all about your approach. Long-term investing in diversified portfolios
Okay.
significantly reduces risk compared to like trying to time the market
Got it.
or betting on individual stocks.
So instead of trying to predict the ups and downs, it's more about staying invested for the long haul.
Exactly, yeah. The source cites Yale University research showing that the S&P 500 has never lost money over a 20-year period.
That is reassuring.
Yeah.
But what about those people who seem to have a knack
Right.
for knowing when to buy and sell? Doesn't that prove you can beat the system?
Well, the data suggests otherwise. The SBVEA report,
Okay.
which tracks the performance of actively managed funds,
Right.
found that a whopping 84% of them underperformed the S&P 500.
The 84%.
In 2023, even the pros, they get it wrong more often than not.
So trying to time the market is not only difficult,
Yeah,
it's statistically unlikely to succeed.
exactly.
Okay, maybe I don't need a crystal ball after all.
No. Instead of trying to outsmart the market,
Oh.
focus on a consistent long-term strategy. Remember, time in the market is often more important
Okay.
than timing the market.
What's fascinating to me is that so many of these myths that we're debunking, they play on our desire for control. We want to believe we can predict the market,
Right.
control our financial destiny.
Sure.
When in reality, a lot of it comes down to patience, discipline, and just playing the long game.
That's a great point. It's about recognizing that wealth building is more about making informed decisions and developing sound financial habits
Right.
than trying to outsmart the system.
Well said. And with that thought-provoking insight, we're going to take a quick pause. Don't go anywhere. Because when we come back, we're diving into even more data-driven truths about wealth building. Welcome back, listeners. I don't know about you, but
Yeah.
my head is spinning a little after debunking those first 4 myths. It's amazing how much we think we know about wealth building
Right.
that turns out to be totally off base.
It's all about challenging those assumptions.
Right.
And getting to the heart of what really matters.
Exactly. And speaking of things that matter,
Okay.
there's this whole idea of financial freedom
Right.
that feels like such a moving target. That dream of reaching a point where money is no longer a concern. Is that even realistic?
It's definitely a popular concept.
Yeah.
But the source material reframes it
Okay.
in a really interesting way.
How so?
It suggests that true financial freedom
Okay.
is less about a specific dollar amount
Mhm.
and more about aligning your spending with your values.
So it's not necessarily about being rich.
Right.
It's about being intentional
Exactly.
with your money.
Yeah.
That makes a lot of sense.
It takes the pressure off,
Got it.
chasing some arbitrary number,
Yeah.
and focuses on what truly matters in life.
That's a good point. Yeah.
And that leads us to another myth that's worth debunking.
Okay.
The idea that you have to sacrifice everything to build wealth. That work yourself to the bone,
Right.
delay gratification
Oh, yeah.
mentality.
I'm definitely falling into that trap.
It can feel like you're constantly choosing
Yeah.
between, enjoying life now and securing your financial future.
But the source kind of challenges that notion.
It does.
Yeah.
It emphasizes that wealth building shouldn't come at the expense of your well-being.
I like that.
Yeah.
Okay.
In fact, prioritizing your mental and physical health
Okay.
can actually enhance your financial decision-making.
So burning the candle at both ends
Right.
might actually be counterproductive
Exactly.
in the long run.
When you're stressed and exhausted,
Yeah.
you're more likely to make
Impulsive decisions.
impulsive decisions. Yeah.
Right. Okay. So the source is emphasizing.
The importance of finding a balance
Right.
between saving for the future and enjoying the present.
Okay.
It's about creating a sustainable lifestyle that supports both your financial and personal goals.
So it's okay to
Yes.
treat myself to a nice dinner out or
Absolutely.
a weekend getaway once in a while.
Yes, as long as it fits within your budget and it aligns with your values.
Okay.
It's important.
This is such a refreshing perspective.
Yeah.
It's like giving ourselves permission
Right.
to enjoy the journey, not just the destination.
And speaking of journeys,
Okay.
another myth that often trips people up is this idea that there's a one-size-fits-all path to wealth.
Oh, yeah.
You know, those follow these 5 steps
Right.
and you'll be a millionaire.
I see those headlines all the time.
Yeah.
And they make me roll my eyes a little bit.
Yeah. It's tempting to believe there's this like magic formula,
Right.
but deep down we know it can't be that simple.
Yeah. No magic bullet.
The source material makes it clear that everyone's financial situation is unique.
Right. Okay.
What works for one person may not work for another.
That makes sense.
It's about understanding your own circumstances, your risk tolerance, your long-term goals.
So instead of blindly following someone else's blueprint,
Right.
it's about crafting a personalized financial plan
Exactly.
that aligns with my individual needs and aspirations.
Yeah, it's about taking ownership of your financial journey.
Right.
And making informed decisions that are right for you, not for, you know, some guru promising overnight riches.
You know, it's funny. I'm realizing that
Yeah.
a lot of these myths that we're debunking are rooted in this fear of making a mistake,
Yeah, that's a good point.
of not doing things the right way.
Right.
But what if we reframed those mistakes as learning opportunities?
I love that. Yeah.
Right. The source actually touches on this too.
Yes.
It acknowledges that mistakes are inevitable,
Right.
especially when it comes to finances.
It's how we learn and grow.
So instead of beating myself up
Right.
over past financial missteps,
Yeah.
I should view them as like valuable lessons
Exactly.
that have shaped my understanding of money.
It's about adopting a growth mindset,
Okay.
embracing the learning process,
Right.
and continuously refining our approach as we gain knowledge and experience.
That's a good point.
Remember, even the most successful investors have made their fair share of mistakes along the way.
Yeah, nobody's perfect.
Yeah.
And sometimes those mistakes teach us more
Right.
than any financial advisor ever could.
Okay, so we've debunked the myth of the perfect
Right.
financial journey.
But here's another one that's particularly relevant in today's world.
Okay.
You need to be a financial expert
Right.
to manage your money.
That's a big one.
Yeah, with so many complex financial products out there.
Right.
And just the constant influx of information, it's easy to feel overwhelmed
Yeah.
and unqualified
Yeah.
to handle our own finances.
And that feeling of inadequacy can lead to just putting things off, important decisions, or handing over the reins to someone else,
Which can be risky.
which can be very risky.
So the source emphasizes that while seeking professional advice can be helpful,
Yes.
it's crucial to develop a basic understanding
Yes, absolutely.
of personal finance principles
Yeah.
ourselves.
It's about empowering ourselves with knowledge,
Okay.
feeling confident in our ability to make informed decisions,
Yeah.
and ultimately taking ownership.
Of our financial well-being.
Exactly.
And the good news is
What's that?
there are so many resources available today to help us learn, like books, podcasts,
On the cast, yeah.
online courses. Like the information is literally at our fingertips.
It is.
And it doesn't have to be complicated or overwhelming.
Right.
Just starting with the basics, budgeting, saving, investing
Yeah.
can make a huge difference.
Absolutely.
It's about building that momentum and gradually expanding our financial knowledge base.
It's like learning any new skill.
Oh, yeah.
It takes time, effort,
Yeah.
a willingness to make mistakes along the way,
Right.
but the rewards are well worth it.
Well said. And I think that's a perfect segue
Okay.
to our final part of the deep dive.
Okay.
When we come back, we'll wrap things up with some actionable takeaways
Right.
and some thought-provoking questions to consider. So stay with us. And we're back for the final part of our deep dive. You know, after uncovering all these wealth-building myths,
Yeah.
it's really amazing how much these misconceptions can hold us back
Yeah.
from reaching our full financial potential.
We often let fear and misinformation
Right.
dictate our decisions when we should be relying on data and a solid understanding of, you know, how wealth is actually built.
So as we wrap up, I want to bring it back to our listeners.
Right.
What's one, like, concrete action they can take today, regardless of where they are on their financial journey,
Okay.
to start, you know, moving in the right direction?
That's a great question.
Yeah.
If I had to choose one,
Okay.
I'd say start by tracking your spending.
Okay. Interesting.
You might be surprised by how much you learn about your financial habits just by paying attention to where your money is going.
It's like holding up a mirror to your spending pattern.
Right, exactly.
Right. You start to see those little leaks and areas where you could be more intentional.
Exactly. Once you have a clear picture of where your money is going, you can start making more informed decisions.
Okay.
It empowers you to create a budget that aligns with your values and priorities. And from there, you can start setting realistic financial goals.
It's like laying the foundation for a solid financial future.
Exactly.
And speaking of foundations,
we've
talked a lot about debunking myths. But what are some core truths about wealth building that our listeners can hold on to?
Well, based on the source material and everything we've discussed, I'd say one fundamental truth is that consistency is key. Whether it's investing small amounts regularly or sticking to a budget, those consistent actions add up over time.
It's about playing the long game, right? Not expecting overnight riches, but trusting that, slow and steady progress can lead to significant results down the line.
Absolutely. And another key truth is that knowledge is power.
Knowledge is power. I like
the more you understand about personal finance, the more equipped you are to make sound decisions and avoid falling prey to those alluring but often misleading get-rich-quick schemes.
It's about taking ownership of our financial well-being and not being afraid to, ask questions, seek guidance when needed, and continuously learn and grow in our understanding of money.
Couldn't have said it better myself.
Okay.
Remember, financial literacy is an investment in yourself and your future.
And on that empowering note, we have reached the end of our deep dive.
Wow.
We've debunked some persistent myths, uncovered some powerful truths, and hopefully inspired you to approach your financial journey with a renewed sense of clarity and confidence.
It's been a pleasure diving into this topic with you.
Likewise.
Remember, the journey to financial well-being is ongoing.
Right.
Be patient with yourself.
Yeah.
Celebrate your progress.
Okay.
And never stop learning.
And if you're eager to explore these ideas further, you can find the source material that we used.
Okay.
Debunking Wealth-Building Myths, Data-Driven Financial Truths, linked in the show notes.
Okay. Sounds good.
Until next time, happy investing.